What's up YouTube, this is KNG to the JEHU. What's up YouTube, this is KNG to the JEHU of Wall Street. Welcoming you to another weekly recap and market forecast. So this video is supposed to drop every Sunday, but today I was busy with a couple of things. Have mercy on me. Next Sunday I'm going to make sure it drops at 6:18 p.m. Nigerian time. That's GMT +1. So all my videos will be dropping by 18 is 6 o'clock, right, in the evening, something like that. So today in this video I'm just going to go on to BTC, USDJPY and gold. We're going to backtest everything that happened from last week Sunday till now, so that as the market is opening in the next few, I think the market just opened, so that before you go into the market on Monday you can have a little point of view from what I'm saying. So this is about a minute. Let's jump into the video. Alright guys, welcome to my screen. So right now this is my primary watch list. You can see USD NGN 1400, BTC 93,000, gold 4,000, USD JPY, and then GBP JPY. So I'm not actually going to be talking about GBP JPY. I don't even know why I said, maybe I mistakenly left it. So now if we go to the chart, first thing we're going to see is BTC USD. Now there's this trade that happened last week. But wait, first of all, where did last week start from? I'm coming. Let's just go to the daily, and then today is Sunday. I don't think new candle are started for me though. So Sunday, Saturday, Monday last week, exactly. So this is our first candle for it. Let me just put a line there so that I'm going to know where we're going to be focusing on. And you can see throughout last week BTC was bearish. So let's start from the 4-hour time frame. Now BTC has been bearish because obviously every end of the year BTC always goes down, and it's an intentional move by all these private equity, all these big banks and the smart money to purposely dump all this crypto and put fear in people. So many people will be taking out their position, and then before you know, BlackRock will invest a few trillions again, and then BTC will continue to bounce. So the US government are doing this purposefully. I know sometimes you see Trump tweeting that people are selling their Bitcoin, they are making it to crash. He'll now be dropping some sad tweets. All those things is intentional so that people can run away from the market, and then they'll boost it for the next year. So just know that by January BTC is going to 140,000. In fact, it has been said on the news. I saw it on Bloomberg or something. So all those ones will still happen, but for now BTC is dumping. So this is the time when investors will be adding their positions, but the ones that are scared, they'll be running away. But that's by the way. So this is where the market started, where you see this line here, right? And from the 4-hour time frame, we are bearish. In fact, once you know the news already, you know that this particular period of time all these Bitcoin and crypto are going to be bearish, you automatically start looking for sales. So right now on the 4-hour time frame, you can even see this. We have this 4-hour order block. Price tapped into it and started selling. After that, price moved down, pulled back up again, continued selling, pulled back, continued selling, and that was how the whole week went. Now if we go down to 2 hours, we're still just seeing the same picture here, right, on the 2-hour time frame. But on this particular time frame, the order block is smaller, and then we can still go down to 1 hour. You see it, the other block, there's another order block. Is obviously the same point of interest, but every time frame has like the size of the point of interest. Now if we still go down up to 45 minutes to 30 minutes, we keep on seeing the same thing. So what happened here is that so right now we started the week off here, price raided this high, right, and took out liquidity of this high. Then we started dropping, and price has been dropping ever since. So if I was to look at this time frame now, based on the analysis, my strategy, I tell you guys, you draw out like 30 minutes points of interest, wait for price to react on it, then you use 5 minutes to continue, or you draw out 1 hour point of interest. The point is, the main point of interest where price is reacting from should be on a higher time frame, and then the point of interest where you enter from should be on a lower time frame. As simple as that. Now after price came into this point of interest here, Then you're now going to go down to 5 minutes and start looking for an entry from that same spot. Okay, so if you were on this, you can even see that we have a 5 minutes. The small order block here on 5 minutes, you can see that price even did a sniper on it. So all those 4 hours, 1 hour, all those things are just the bigger picture. Price did a sniper on it. Now in case you didn't get this sniper, right, you just waited for price to react on this whole zone from higher time frame. After the reaction, what you wait for? I always tell you guys, you wait for 5 minutes like this other block and a liquidity, then price will take out the other block and begin to sell. Now this exact thing, what happened here, this is going to be your POI, this is going to be your liquidity, and this exact thing that you're seeing here is what happened right here in front of us. If you look at this place, you see that the moment price entered here, you wait for your order block and your liquidity. And what the price do? The price gave us this as order block, and then this is where we enter from, and price gave us this as liquidity. Don't say I didn't tell you. So guys, after this, your entry will be here, and then some of you will be wondering, how do people used to catch high risk to reward ratio? This is basically everything behind high risk to reward ratio. Once price gives the reaction, you enter from the order block. Your stop loss will be above the order block, and then guess where your tip is going to be, because we're in a bearish move, we're in a bearish setting, so you're going to target at least this low. If you target this low, you see it's a 26 risk to reward ratio, and then the overall low of the trend. Okay, this low is actually very far, but for now, this line is actually me that placed this line, because I want to know where the week started from. But if you look from the previous week, you see this low too. That's where your TB can be, and that's a 36.47 risk to reward ratio. So if your risk was $1, you make 36. If your risk was 10, you're making 360. That's if you didn't add any position, it will be just one position. If your risk was 100, this will choose at 600. If you add position, you can even do 100 to 10k straight on this particular kind of trade. Now after this, price begin to pull back, because after price moves, it has to pull back to at least 50% or more. Now if I draw my Fibonacci from here to this point where the move started, you're going to see that price has already pulled back to more than 50%, right? So immediately after this pullback that happened here, we're going to be now looking for the next point of interest to sell. Now still on this 5 minute time frame, if you look from this point, okay, let me go to maybe 15. Should it be 15? Okay, there's nothing on the 15 minute time frame. So this sell was very strong, and the 15 minute time frame, 30 minute time frame were not able to give us a point of interest that will now come and wait for a reaction from. So nevertheless, we'll still remain on the 5 minute time frame. But at the same time, if you look at this 5 minute time frame, you're going to see that price pull back to a demand area. This point here where you see we have something like a 5 minute breaker block within this zone, and you see that price came into that zone. Now this zone is your first reaction. After that, what do? You look for the next point of interest, because we're already on 5 minutes. And if you look here, you're going to see that we have this breaker block, this tiny black candle here. You can drag it like this, you see, to continue sell. And after the breaker block, what did price do? Price did accumulation, manipulation, and distribution. It moved in ranges, and then it went up to trigger a point of interest and sell down. That's what we see happen here. So price moved like this and then came back and triggered this exact breaker block too. So even if you miss the first breaker block, you still have a point of interest to take the sell from. And from here, you see, because the breaker block is too tiny, this trade has to be sniper or nothing. So if this trade doesn't reverse on the exact spot, you know that you are wrong, because the point of interest is a very small one, and we take the entry from the body of the candle. So after this, the same thing happened. Price sold again, and after that, price also pulled back a little bit and continued selling. From here too, we have even something similar like that. Price took out this high here, and then, but let me see if there was a point of interest there on 15 minutes. Okay, there was none. But anyways, after that sell, if you're ever able to predict that the sell is going to be far, you're ever going to hold your position. So this particular sell, the first one happened on Wednesday from here. Yes, and then the second one happened on Thursday. So Wednesday and Thursday are the biggest days that the market moves. Anyways, we might not just take this to predict future markets, but obviously you can do this. Now that's that for BTC. Let's go to XAUUSD. Now on XAUUSD, let's go to our daily time frame. This is Sunday. Okay, no, this was Friday where market closed, right? And then Monday where market opened good. So this is where our week started. No, not this. Ouch. This is where our week started. Now from here, go down to 1 hour. Gold actually was bullish from the opening of the week. I don't actually know why, but from the 4-hour time frame, there was a breaker block that gold was pulling back to, which is this one. Can you see this breaker block here? This particular black candle that we have here. So gold was pulling back to that breaker block, and the moment it tapped that breaker block, the fall began to fall. But this is not an indication that gold is currently bearish, because of course it can just be a pullback that happened from the breaker block. But on the news, they said something as gold was still buying despite people's expectations. So everyone was still expecting gold to sell after, because gold was buying when Trump was increasing tariffs on China. So as Trump met with President Xi and then they analyzed everything, they settled the deal, gold was supposed to start dropping, but gold was still rising despite people's expectations. So gold is expected to drop, but it was still rising. So right now we can't be like sure if we are either bullish or bearish, but since price is reacting from a bearish point of interest, we're going to continue looking for sales next week with proper reaction. So right now let's go down to our, because right now the moment market open, gold just started buying, so we can't even actually say there was any point of interest that price has to react to and all that stuff. But we're still going to see more of that as the week goes on. But the moment the market open, gold just started buying, and let's see what gold used to buy if we can get, because the goal is that anything that happens in the market, there's always reason for it, and if you know how to trade, you can spot the reason. Good. Now immediately the market open, what do we see here? We see price accumulate a little bit, then manipulate down. Okay, no, yeah, manipulate down. But you see, this was the point of interest that price is, but I don't know why price did not use the body. But I discovered that of recent times, gold has been like so addicted to this 3-minute time frame. I don't know why. So when you see 5-minute time frame do not really show you any move, you might as well just check the 3-minute time frame. Maybe there will be something that gold is hiding that you're not seeing. Okay. Yeah. So that's just what we can say about that. But anyways, this was where price opened, where you see this long line, this long vertical line, and then price just started jumping. Okay, first of all, price opened and tapped on this, right? Yes, price actually tapped on this particular one. So price tapped on this particular point of interest, very sniper, immediately started buying. He didn't actually touch this one, but he was just buying. Now when price got to this place, what do you see? Just pull back, and then probably this at a point of interest continued buying, and when price actually came here that it began to range, I'm sure there must be something that happened on the higher time frame. So let's see. Okay, when price began to range here, what do we have? We have this breaker block. It's a point of interest too, but we're not going to enter on the point of interest. We're going to wait for a reaction. So once price starts the breaker block for 30 minutes, you go to 5-minute time frame and look for your liquidity. Okay, good. Now, yes, price tapped on it here. Right now we're going to look for 5-minute order block and liquidity. Now we can't even find a 5-minute order block and liquidity, but we can also see that price came back to this zone down here before it started buying. So maybe the order block and liquidity was on 3-minute time frame. But anyways, this is just the concept. You wait for price to trigger it, then you go to the extreme POI, And the reason for this is because your stop loss is going to be tight. Okay, yeah, see one other block here. The reason for this is that your stop loss is going to be tight. That's just the advantage. Enter here, enter below here. Excuse me. But funny enough, this SL is 52 pips because currently gold is really in a very wide range. So the smallest SLs are even like high pips, low key. This is actually a 50 pip stop loss. And then well, your TPB obviously maybe this next high, which is 437 pips. Or since you know that gold is really bullish and is strong to the upside, you can as well just hold your trade. Just hold your trade. You see, that was 1399 pips to this this possible reversal point, which is our 4 hours breaker block. So I think that's that for gold. We don't really have much to say. Now after price tap that 4-hour breaker, we're going to now start looking for 5-minute order block and liquidity. Now when you're looking for your 5-minute point of interest to continue the sell from where the sell has started, this is how it's going to look. Price has already tapped here. Our recent low was here. Let me delete this. Our recent low was here, and then price has changed character and has started going down. So I didn't even take a long time. I've already found a point of interest. So this is a 5-minute order block. Now the possible point of interest you're supposed to use, one is going to be this is a breaker block, right? After the breaker block, price now created another block here and mitigated this other block by using it here to move down. So where's your next point of interest? Going to be here. Now if you put your entry on this line like this, you're going to see that you're going to have a missed entry. But anytime price comes close to your POI and doesn't use it, it means it is an inducement. So it's not a missed entry. So this is the inducement. And guess what happened after the inducement? Price came back and sniped the hell out of that zone. Now your stop loss is going to be a little bit above this candle. So that's going to be 34 pips. And guess what your tip is going to be? You're going to target this low because this is the next break of structure. And then because you know that gold is really volatile and it moves fast, you can actually even target this low. Or you can just put break even and then you can still hold up to this low. Yo, this is a crazy move. But the main point about this strategy is that wait for price to trigger the higher time frame point of interest, then just go to 5 minutes so you get something that you can use to catch yourself. This fall was 1571 pips. Alright, now let's go to USDJPY. First of all, we go to our daily time frame, analyze what happened 7 days ago. Now the market opened on Monday, which is this. I guess USDJPY wasn't even really doing anything recently. So now we'll go to 1 hour time frame and see what 1 hour did. Now the market opened here. What are the possible points of interest we can notice? You can see this breaker block, even though it was mitigated. What else can we see? This other block was used to move a little bit. Okay, let's say this other block now. Now after price taps on this other block, what you now do? You now go down to 5-minute time frame. And where is it? Okay, yeah. From a 5-minute time frame, I'm going to be looking for order block and liquidity. Now this USDJPY was so choppy, there was no order block and liquidity, but we know that price just pulled back, and from that spot it just kept going high. They didn't even give us any order block and liquidity, they were just buying, you see. So and then price now dropped and started buying again, And if you go to higher time frame, you're not going to see any point of interest that made price to drop. So um let me pay attention again. Maybe there's something I'm missing out. Let me see 30 minutes. 30 minutes. Is there anything I'm missing out on? Okay, price came and tapped on this other block here, but did not reach the full take profit. It reversed. So anyways, USDJPY is in a ranging market, so there's no actual proper direction. That's why price goes up, go down, go up, go down. We're not seeing proper break of structures. Like now, if this was bullish, after price came down here, supposed to go up, pull back and go up again, but what happened? Price still came back to take out this low. So this type of market condition is not conducive. So I won't even advise anyone to trade USDJPY this week. So anyways, the thing is, whenever the markets are misbehaving, Bitcoin and gold are really volatile, so they are always active. So I will suggest that as a trader, you should focus on Bitcoin and gold, but not be entering with all this 1:3, 1:4 head and shoulder bullshit. Just learn SMC, get your lower point of interest after the reaction and snipe it. Now if you want to learn more of this, click the link in my bio and you're going to see my mentorship plan. Just look for the one that's suitable for you. Either it's a general class or the private 101, and I'd love to tell you more about this. Alright, see you on my next video.